The South African rand marginally stronger this morning with the JSE that closed April with a 3% stronger and tracking, or should I say trailing the global market, whose attention is on the slew of data expected out this week, as well as meetings held by the central banks globally, including Australia. Well, let's get some perspective now, and we'll speak to Citadel Global's director, Bianca Botes. Bianca, good morning to you. Let's begin with how the markets are looking locally and globally. Are there any important data sets that we can expect this week?
Good morning to you and the viewers at home. Currently, there's quite a bit of uncertainty in the market, and markets are looking towards two key events this week, or actually leading up into May. Firstly, the US Fed interest rate hike, which we are expecting to take place tomorrow. Markets are gearing up for 25 basis points interest rate hike from the Fed, and then a possible pause and even rate cuts towards the end of the year. So that's definitely a big event that we are keeping an eye on. The second big event that we are keeping an eye on is the US once again approaching a debt ceiling, and you've probably heard about the fiscal cliff quite a few times and that debt ceiling. So they actually need to apply to Congress to raise that debt ceiling once again, and failure to raise it in time could actually see the US not being able to meet some of its obligations as soon as the 1st of June. So that's definitely something markets are keeping a very keen eye on.
Yeah.
As you mentioned, we also have quite a bit of data this week. Firstly, we will be keeping quite a close eye on the European flash CPI data, which will give us an indication in terms of what we can expect from the ECB. Locally, we are expecting PPI, which is producer price inflation, as well as vehicle sales. And then we are also looking towards key employment data from the US leading up to the end of the week. So that will be on Thursday and Friday.
Yeah. Let's quickly touch on the rand. How's it likely to fare this week?
The rand's still trading pretty much range bound. We're currently sitting at 18.36, just above that. And the rand has actually come under quite a bit of pressure given the uncertainty in the market, and markets not really knowing what to expect as we head into the latter part of the year. However, should we see a pause from the Fed, and should we see an indication from them that they will start looking at decreasing interest rates towards the end of the year, that could really bode well for the rand. Unfortunately, in an environment where we are seeing quite a bit of uncertainty, risk assets comes under pressure. And as you know by now, the rand is classified as one of those risk assets. So the rand and other emerging market asset classes tends to come under a bit of strain.
Let's talk about the International Monetary Fund, the IMF, warning that sub-Saharan Africa's economy will stagnate as long as there is conflict in the region. What does this mean exactly? And let's factor in the Europe war as well. Ukraine-Russia conflict, how's that likely to impact?
It's interesting because there's been quite a bit of talks about how the world is really fracturing into two separate parts. And this warning by the IMF really revolves around the increased geopolitical tension in the world, and specifically between key trading blocs such as the US, China, and the EU, that could actually see permanent growth declines of up to 4% over the next 10 years in the sub-Saharan area. The economic trade and alliances with new economic partners in Africa has really benefited from these alliances, such as China, and has really made the country or the region very reliant on imports of food and energy, which now becomes more susceptible to global shocks, including disruptions, for instance, like we saw in the trade restrictions following the invasion of the Ukraine by Russia. So these increased political tensions actually puts pressure on our ability to source goods, and that actually raises the cost of importing certain goods that we need to bolster economic growth. Currently, the view is that if the geopolitical tensions were to escalate, countries could be hit by higher import prices or even lose access to key export markets. And that would put significant pressure on Africa because of our our ability to export quite significantly, especially in the commodity markets.
Let's conclude with reports coming in this morning suggesting that the Public Enterprises Minister, Pravin Gordhan, has left for China. Incidentally, you spoke about China earlier, to resolve a standoff over the delivery of locomotives, including other issues such as spare parts. How significant is this trip for the minister and, more importantly, is it likely to resolve that standoff?
So I think anybody who lives in South Africa who's driven past a railway in the recent months knows exactly the state that our railway infrastructure is currently in.
Yeah.
And this trip really forms part of an effort to fast-track the supply of rail equipment to South African state-owned entity Transnet. After supply was actually halted on the back of 54 billion rands worth of contracts being awarded irregularly in 2014. This meeting aims to actually find a resolution to the impasse that is considered top priority by the presidency due to the declining state of our railway infrastructure in South Africa and the resultant negative impact that this has on the South African economy. While it's not really currently directly impacting on local financial markets, a resolution in the matter can boost sentiment on the ground and eventually lead to enhanced economic growth in the longer term.
Bianca Botes, thank you very much for that market update.